here to have a number of attendees with us. So thank you all ever so much for joining. A few more may trickle in as I introduce the webinar today, but let's get things underway nonetheless. So first of all, good afternoon and thank you for joining this Code webinar created in partnership with Main Course Associates. We are joined today by owner and CEO Muhammad Asif. Thank you ever so much for joining us and sharing your expertise with us. Following my introduction, Mohammed will take over and guide us through his presentation. We will then have some time for questions at the end. If you would like to ask a question during the webinar, please type it into the chat function on the toolbar at the bottom of your screen. We will be addressing these at the end. We may not be able to answer all the questions in the session. However, I will be following up with everyone. So please bear with us whilst we do, and we can answer all outstanding questions in our follow-up. The transition to digital is new for a lot of us. So if we do experience any technical difficulties, please bear with us and we'll get them sorted and we will keep things moving. I have muted and turned off all cameras for all attendees. If you could just keep it that way throughout the presentation, that would be great, just so we don't get too many interruptions during. Other than that, again, thank you so much for joining us, Mohammed Asif. I will pass over to you right away.
Fabulous. Thank you very much, Ed. And thank you for having me. And welcome to all our viewers and listeners, however you're connecting to us today. So my name is Mohammed Asif. I run a specialist hospitality firm in Mayfair called Main Course Associates. We have offices in various other parts of the EU as well, including Spain and Italy. And predominantly, we assist restaurant and hospitality business in finance and operation support, including management accounts and acting as their finance directors and so on. I have a fairly limited time with you today, so we should get straight to it. You'll find that some of your questions may get answered as we go through the webinar overall, but please do save them and do keep posing them, as Ed has mentioned earlier. What I'll be covering with you today essentially is going to be part strategy, and then we'll spend a fair bit of time covering the finance and cash and all these various schemes that are available at the moment. And you'll then have a chance to ask questions at the end. So I think we should dive straight into it, and let's look at the strategy part first of all. So you're a restaurant owner and you spend all your time and effort and energy into opening or developing a wonderful concept, and the worst happens. No one's prepared for it. There are no dry runs for this sort of thing. You can't soft open with a COVID-19 sort of scenario. So we have to think, what do we do in situations like this? I think the initial shock has worn off, I think it's fair to say, overall. And I think what we're finding is that nearly 81% of the restaurant businesses or food businesses have either paused or completely stopped trading these days. Now that's a scary statistic, but also it represents the opportunity for those of you that may be operating or are perhaps thinking of operating. So I think in the strategy, the key message that I can give you really is that this coronavirus myth that we can just ride it out, or we can wait for the government support and somehow that will take us through, really is a myth, and that's not going to work. So those of us that want to remain in play to fight another day really will need to start to think to reinvent ourselves, and we have to come up with solutions that make us prone to continue to trade. So there are various solutions that you could be thinking here, and in various parts of the world where we operate, we have tested some of these, including across the pond in America. And what we've found is that some of these solutions, as you start to offer them, the first couple of weeks are a bit slow, but then slowly and surely your customer starts to trading moving forward. So really and truly, what we're looking to do here is come up with solutions that ensure that you have some kind of trading and money coming in. So things that you could be doing here are, you could come up with a recipe such as take and bake. Over across the pond, we came up with a solution for a Michelin star or a rosette experience, dining experience at your home. So this is where you may have a van or a couple of vans or something like that, and you come up with a high-end offer whereby you could simply prepare a Michelin star experience with a nice bottle of wine, and you could bring it to the people's homes, either just outside, or actually you could even set up the table for them. We priced these at nearly $500 over in America, and they seem to be selling very, very well. So that's certainly something that you could be thinking about, in addition to the take and bake scenario that I mentioned. There may also be some subscription-based models. So this is a new thing that we just started discussing from last week with some of our clients, whereby perhaps we should be thinking about coming up with a subscription-based model whereby you could provide a dinner and breakfast service to your customers, and with a reduced menu. And they could pay you upfront £1,000 or £500 or whatever it may be for a month or a week or a fortnight. You could decide whatever that period is. And during that time, you could commit that we will cover for your dinner and breakfast. Breakfast, frankly, isn't that expensive. Over dinner, if you came up with a clever menu, that could work very well as well. And so this could really start to ignite that cash flow problem that a lot of us are having. So main part of the strategy for me was to ensure that you could think about ways whereby you can continue to trade. The final point on this is also to think about perhaps launching your own delivery, so that you can save commissions that you may be paying to Uber Eats and Deliveroo and so on. And there's a lot of staff that you have, so you could simply unfurlough some of those people who have been previously furloughed, and send out mailers to your customers that we're doing our own deliveries. This could be your offer at their home, so you could position it like that. We have a couple of clients that are doing this service, and it's working fantastically well for them. And of course, we're saving the commissions there as well. You could choose a finite radius, so it could be within a kilometer or two, whereby your staff can quite easily do that. Needless to say, in whatever you end up doing, please ensure that you're following the government guidelines. That's very important. Okay, well, that's very nicely leads me to the next part, which is about finance and cash. So here I will be covering 6 different parts. The main thing would be that in each of these you'll have a scenario, we'll cover a strategy, and then I'll give you a few tactics that we have employed for some of our clients and or recommended to some of our friends and the industry overall. But the key message that you can take from me here is that the music stops when the cash runs out. So the challenge here is to preserve the liquidity that we have, and for a much larger whole. So you've got to be looking at both scenarios. We ought to be applying for the available grants and schemes. But the key thing here again is to communicate with your vendors and stakeholders. So the very first part of the 6-part finance cover is cash flow. So this is the money that you have in your bank account and or through your card systems and so on. The strategy here is to preserve it. We have worked out a scenario where we found that it's useful to come up with a method of drip feeding your suppliers, not as and when they call, but on your timetable. So we work out the age creditors or your overall creditors that you have. We work out a percentage that your cash flow is able to cope with, whether that's 10%, 15%, or 25%. 25 has so far been the highest number that we've agreed with suppliers. And then we agree that we will pay this to you on a weekly or a monthly basis, depending on how our cash is set up. It gives them some certainty, and it certainly gives us some certainty, which means that we can plan our own cash flow a bit better. So that's the key message here. Rents are another big area of net outgoing. We have a slide further down that we'll cover further on. But I really am of the view that you shouldn't be paying any rents currently, especially in Q2. The industry is trying to do a few more things, but in the meantime, at least for this quarter, hold on to any of those payments, but certainly talk to the landlords. Don't just hold on the payment or cancel the DD without talking with them. You may have some lenders in terms of hire purchase arrangements or asset purchase deals that you may have in place. I think you could have, some of them will continue accruing that interest, and that's very minute, frankly. I don't think that's a problem, so I think you should keep that going. You should discuss with them in order to get those payment holidays. Plan the crown debt. So this is your payments with HMRC, whether that's VAT or PAYE or corp tax and so on. So we've got to be planning for that. An overdraft, a temporary overdraft, a lot of banks have allowed, even the companies that they had previously said no to, they've now allowed a small 3-month overdraft facility, 25 to 50,000 pounds. It's certainly enough until you get the loans in play. And the last point here, and again, we'll cover this further about furlough payment, furlough outlay plan, is where you have to stump up the cash when you are furloughing people, and the government will then pay you apparently 6 to 8 days later. But either way, you could be planning for that. And again, we'll cover that. We'll cover that shortly. Again, please communicate with creditors, whatever you end up doing, whether you're paying them or asking for holidays or not paying them at all. Moving on, the second part of this is the actual crown debt. The strategy here is to make use of the cash flow support that HMRC has made available to us. They are allowing time for collection of tax bills using payment arrangements. These are time to pay arrangements, similar to what they did back in 2008 crash. The PAYE support line you can see on the screen there. We'll share these slides with you anyway. And the VAT overall has been deferred, but do plan for it. So rather than just deferring it, if you had sufficient cash, then you should be thinking, should we pay some of it now, or do we just dump it all later on? Because remember, what you don't want to be doing is digging yourself a much, much larger hole further down the line. So it all needs a bit of a thought and planning, same as above for corporation tax. So furlough and staff. Now the strategy here is to furlough the staff, but plan your cash flow when you're making the payments here. Code has already done a pretty good webinar a couple of weeks ago that covered most of the elements around furlough. But the main message that I have here for you, there have been 2 changes since that webinar. The first was that the submission, the criteria for people who can be furloughed had been changed from 20th of Feb to 19th of March. However, do not get caught out here, because it only applies if RTI, which is the real-time information report, had been submitted by 19th of March. So where you had a calendar monthly payroll, unfortunately, you still lose out, and that could only apply for staff that were on your payroll dated 28th of February. HMRC have now confirmed that the trunk is not included in the furlough, so I'm afraid that certainly singles out the hospitality industry a little bit more, but it's important that you communicate this with your team so that they are aware of it. And if you had included trunk in your previous return in March, then you might want to think about having a discussion with your staff to whether repay it or adjust it somehow. The message here for me was that when you are furloughing staff, you are still having to stump up the cash. You are paying the people up front and getting the reclaim from HMRC 6 to 8 days later, once that submission has been actually made. So what we've done with some of our clients is we've offered the staff that we could pay you half of the money now and the remaining half when the government grant actually comes through, or all of it later on, or all of it now, depending on what your cash flow is. You want to be thinking and planning for that. Moving on, we have rent. So this is a very hot topic at the moment. Asking for rent holidays or longer delays or national timeouts and so on. So a lot is happening at the moment. There has been a message to the Treasury that we should be allowed a 9-month payment holiday or 50% rents until 2021. I'm not entirely sure if the government's going to get involved, and therefore part of this webinar is really telling you that don't just sit and wait for the government support. If it comes through, that'll be wonderful. But if it doesn't, we should really be doing things of our own accord. So the strategy here is that we should be asking for payment for rent holidays, certainly for the quarter that we're in at the moment, because it's very clear that we are not going to be able to operate. And even when we are allowed to operate, I really am of the view that we'll probably only be operating at 33% of our capacity, let alone 50%, because you may need to leave 2 tables in between in some cases rather than just 1. So that immediately takes your overall capacity further down. Now, rent is a big expense and it's a net outgoing, so we ought to be asking for a rent holiday. There are some landlords who are saying, well, actually, don't pay us the rent, but this large rent deposit that we hold for you, why don't we use that? I think that's a bad idea, personally. I have seen that some finance professionals have advised that you could do this. I'm of the view that currently you should simply hold out. That is an asset that you'd held with them, and I think it's unfair that they simply take it, whereas your property is not occupiable, and therefore I don't think that you should be paying the rent. So it's a matter of really having a good, strong argument and a discussion with your landlord. If they do press that you do have to pay, then I think you should be asking for as long a time as possible. In a lot of cases with our clients, we have offered that during 2020, we do not pay any rent at all, or at least for this quarter and the next. And whatever's left over, that is tacked over the period of 2021, whether that's 15% per quarter or 25% per quarter. So it's certainly a tactic that you may want to think about, but please do not let the landlords eat into your rent deposit at the moment. Moving on to business rates and grants. So the strategy here is that you should be ensuring that you've claimed your grant. Some of the councils have been dreadfully slow in this, and some of them indeed have still been sending rates bill and taking direct debits. So in tactics here, the grant is available if your rateable value was under £51,000 to the tune of 25,000. And if you were claiming small business relief, small property business relief, then you have £10,000 of grant available. Now this applies to each unit that you have as a company, or if you were multiple companies, then for each property there as well. Please ensure that your business rates credit notes have been issued. As I said earlier, in some cases we've seen that that's not been the case, but also cancel your direct debits. We have seen 2 or 3 councils have simply gone away and taken the direct debits. Now we will get that money, we trust, but it just messes up with the cash flow. So if I were you, I would simply cancel those direct debits for now. Right, that very nicely leads me to the CBILS and other loans. So this is the crux of the matter, really. Doing everything that we've talked about earlier, so coming up with the strategy of trading to see what kind of cash flow we can generate from it and what that little P&L looks like, to ensuring that we have the grants, to ensuring that we've delayed the rents and plan for the crown debt, will bring us to a point where we can think about asking for a loan. So rather than just asking for a random, well, let's just go for the maximum amount that we can ask for, or a minimum amount that we can ask for because of quickness. I think it's better to plan for it. So that may take you a day or 2, but it's better to do so. So the strategy here is to ensure that you apply for the loan funding. This is going to be a key driver of cash. All other support that you're getting from the government is frankly trickle, really. So this is going to be a very important part that takes us to December or indeed March of next year, by which stage we may start to see the levels that we've been operating in January, February. So the government-backed loans are capped at 80%. Most retail banks have now said that up to 250K, no PG will be requested. Indeed, one of the banks came out the other day and has said that up to £75,000, they'll be very quick. But as I said, rather than just thinking that 75 is very quick, let's go for it, we should really be planning our cash flow. So here, the challenge is that you need to ensure that you do some detailed workings to see what the business looks like, not just this year, but also in the subsequent 2 years. So you should do a 3-year model for this loan. And the key is to show the viability of your business. Now, some banks that I'd been talking to, indeed, in relatively in argumentative sense as well, had been saying that if you weren't profitable, that means you're not viable. I think that's a load of rubbish. You could be very viable without necessarily having to be profitable. If you open a restaurant in Q3 or Q4 of last year with £1 million in equity funding, and you've only spent £500,000 so far, you are okay. You are a viable business. But also, you may not have been profitable so far because you haven't had enough time to show that the sales have reached maturity. So I think focus on the viability rather than the profitability. So we've simply been changing the language that the banks have been using. Now, the pack that we've found has worked very, very well with the banks so far is on the right-hand side of the screen that you can see. So this is a pack of, ideally we'd recommend that you put together a PowerPoint presentation with everything in. So it's pointless sending very detailed spreadsheets and so on to the bank. Frankly, I don't even think they have enough time these days to look through all of that. And if they don't find the data that they're looking for very easily, chances are it's a very easy no to say, well, it's a no for now, just come back to us and we'll appeal it for you. It means they move on to the next application because they're under pressure to try and answer as many queries as they can. Now, the pack that we recommend is, it should have your latest filed accounts, latest full file accounts. So I think that's going to be an attachment, but put the summary on the PowerPoint presentation. Your latest management accounts, and this is important because if you just use the last filed accounts, some of the December year ends, December 2019 year ends, have not yet prepared or filed their statutory accounts. So if the bank ends up looking at just your 2018 data, that's too old. We had one client who tried to do this and actually really struggled with the bank, and we had to sort of step back in and try to really take charge. So use the latest management accounts. This could be your accounts to December 2019, but also the next couple of months, Jan and Feb, if you have. We would encourage that you add a forecast or budget for the year without COVID. So if this scenario hadn't happened, what was it looking like? Now, that's going to be good because it will show the real loss of gross profit that you're going to have in your business. The latest balance sheet, and here the bank would ideally be looking for your current ratio, and it should show some decent reserves, but depending on what your business has been operating, it is what it is. Cash flow forecast, and we would encourage you to add the loan and the repayments so that the bank can see what the position would look like, that you do have the ability to repay the loan. This ties in with my point about viability earlier. And then two further points. So one is commentary on your numbers. So this is commentary on the performance that you've had so far. And then notes on the actions that you've taken against the adverse effect of COVID. So these are things like rent holidays or deferral of ground debt and so on that you may have done. We would recommend that you ask for a 4-year period, depending on, by the way, this would change case by case. But if you're asking for around £250,000, we think a 4-year period with a 12-month deferral on capital and interest works very well. Because it gives you a nice 3-year period afterwards. It gives you the first 12 months to really try to reestablish your business. So I think this pack we have seen so far works very well. Hope it helps you, and have a look at that. Here's a quick summary of everything that we've talked about. As I mentioned earlier, we'll share this with you so you can have a look at. But this really summarizes everything that we've talked about so far. I'm ready for your questions, but just before so, I have a quick quote that I wanted to leave you with, that Darwin said many moons ago, that it's not the strongest of species that survive, nor the most intelligent, but the ones that are most responsive to change. Now, this is here, this is the new norm, and I think we just have to ensure that we adapt and we work with it to ensure that we remain standing to live to fight another day. Thank you very much.
Thank you ever so much, Mohammed. That's really, really useful, and I'm sure people will have some really, really good takeaways from this. I can see that our chat function has already been used. I am happy to pass that back over to you if you'd like, if that's easier for you to respond to the questions. The first one in there is from Roxy. I'll just minimize myself
Yeah,
again so as not to distract.
sure.
Thanks very much.
Do you want to carry on, Ed, and I'll just listen in and then start to answer?
Yeah, absolutely. So Roxy's first question was, how long on average does it take to negotiate a plan for Crown debt with HMRC and for it to take effect?
Well, first of all, you have to be very patient and be ready to be on the telephone line for a long time. I think the longest I spent was about 4.5 hours the other day. We have found that if you offered them a plan until March 2021 or a 12-month period, that was relatively okay for them to accept. I haven't had any plans so far that we've had to ask for longer than 12 months, but I think depending on the overall position of the debt that you had, but also remember, depending on the overall government guidelines that come through, I think you should be asking for the longest possible time that you could ask for. That would be the right thing to do. They would agree pretty much on the phone. So wherever we've made the phone calls with an offer, it's been pretty much accepted. We've asked them that we don't start making any payments until the first week of June. So far, the plans that we've put forward have been from June onwards until March of 2021.
Thank you very much. Charlie McVeigh has asked, what's your view on insolvency as a solution to balance sheet reconstruction, as opposed to raising further debt via CBILS and other debt, when the burden of repayment in an uncertain world may make it inevitable later anyway for many companies?
I think this is an interesting topic. I'm not a specialist in insolvency practices, so I'm afraid I'm not going to be able to give you too much of an insight as to solution on what the current position is of your business. And if you feel that it makes sense to do so now, then perhaps that's the right call. And you should certainly be speaking to insolvency specialists about that. I'm of the view that if we really plan our businesses accordingly, and if you were a relatively stable business beforehand, then I don't think that should necessarily come into play at this stage. But depending on each balance sheet, it may very well be that you need to take this action.
Thank you very much. Carol Deeney has asked, are there any rules as to hiring new employees on new contracts versus rehiring furloughed employees? I have some part-time hours to fulfill, so it would be financially better to leave my full-time workers on furlough and pay new employees for the hour they work.
Could you repeat the question for me, please?
Of course. Are there any rules as to hiring new employees on new contracts versus rehiring furloughed employees? I have some part-time hours to fulfill, so it would be financially better to leave my full-time workers on furlough and pay new employees for the hours they work.
Yes, I mean, nothing stops you from having to do that. We hired a couple of staff in our own team recently. I don't think that's necessarily a problem. If you feel that that works well, then I think you should be doing that. But I would go back and say, look at the overall strategy of the business. If you're thinking about perhaps starting something new, then maybe it's worth using one of your existing staff members. And they may very well be prone to wanting to work rather than just sitting at home. It's something that we're finding across the board. Our firm overall looks after nearly 800 odd employees across various clients of ours. And we find this often, that whenever we go and talk to them about, hey, look, we're trying to do this, are you interested? They, more often than not, they want to actually work as long as they can still earn a decent living out of it.
Great, thank you. And Roxy's asked another question. In your opinion, is national timeout likely to happen?
Well, that's $1 million question at the moment. I would love for it to happen, but my gut tells me, I'm afraid that's not going to happen. I can't see the government stepping in for that longer period. But I think it would be a good idea if the government did something. We have some clients across the pond, and we have found that over there, there is a bit more support. There's not just the support for workers, but also around rents. And we haven't got that here at the moment. So it would be wonderful if it did happen. But I struggle to think that that will go through. But I endorse it.
Good. Liv has asked, when pivoting from a restaurant to a takeaway / provisions store, are there any insurance licensing alteration businesses would need to apply for?
Definitely a good idea to inform your insurer about it. I think we're finding that the councils are very laxed about it, so they're not necessarily asking you to have to reapply for a license for alcohol and so on. But we would absolutely be encouraging that you inform your insurer.
Thank you. And Stuart has asked, for directors on furlough, how much work is actually covered under statutory duties? It seems a very grey area open to interpretation.
Well, it is a very grey area, and I'll give you a line that hopefully helps you, which is that as a director, you cannot be involved, or indeed any furloughed worker, you cannot be involved in any revenue generating activities. So there may be some administrative stuff that you need to do, by all means do that. You simply can't be doing anything that generates revenue. So you can't be then negotiating deals and so on. If you are, then I'm afraid that'll be seen as revenue generating and then it won't work. So that's the key message there.
Thank you very much. And I think a good question to close on, actually, and probably a burning one for a lot of us, is what do you envisage the initial post-lockdown trading to look like for operators in the UK open at 50% capacity or less?
So my personal view is, and actually we're looking around everywhere at those countries that are slightly ahead of us. But if we look Far East, Hong Kong, there are some restaurants operating there, and it's sort of less than 25% actually at the moment. I mean, Soho House themselves came and said that it's only about 25% capacity. I just think that hospitality, restaurants, as far as the sit down element of that is concerned, it's not just about food, it's the atmosphere that we create. So if you imagine there's one or two tables missing and then staff are all wearing masks and so on, it just doesn't create that vibe. So our worry really is that when we're allowed to open, it would be deemed by the government that it's almost 50% capacity. The reality is it could be around 33, maybe even 25%. And a lot of operators will end up thinking, well, is it even worth operating? That's partly why I was suggesting earlier that we should be thinking around some other scenarios whereby you have take and bake or delivery at home by you, or food by home by you is offered to try and compensate for that. I think the worry really as well is that when we are allowed to open, if the government says, well, as soon as you open the doors, now all the grants and everything else and the furlough that we've made available disappears, I think that would be quite disastrous. We hope that won't be the case. Indeed, we're thinking that the government may go down a slightly scale route by 50%, 60%, 40%, and so on. So they will reduce the furlough element accordingly. But yes, I'm afraid I don't have the magic wand, and I think we're preparing our clients and ourselves that it will be around 33% sit down, and then it's up to you how well you've pivoted yourself around other offers or other solutions that you could offer to try and get up to 50-odd%.
Brilliant, thank you very much. If anyone, oh, sorry, there is one more question. Oh, no, sorry, no, Roxy's just saying thank you ever so much.
Pleasure.
If anybody does have any further questions, I will be following up with all attendees, and I can share, I have Asif's contact details so you can get in touch and ask anything that's really burning. But in the meantime, thank you ever so much for imparting your knowledge on us all. It was really, really useful. And I hope everyone took something away from it. As I say, we'll be following up. But in the meantime, please, everybody stay safe, and we'll catch you all soon. Thank you very much.
Thank you very much.
Goodbye. Take care, everyone.